Hello and welcome back to Catching Up on Capitol Hill, a series in which we discuss the latest in tax legislation and in tax policy. I'm your host, John Gimigliano. We are back on the tax cliff grind again this week. Last episode, we talked about the rules of budget reconciliation and how those complex rules could shape the content and the timing of a tax bill. This week, we're on another topic that you might think of as more procedural and less tax specific, but we're going to talk about it for the very same reason. The question of how Congress measures the cost of or revenue raised by a piece of legislation, well, as you can imagine, that method is essential to how a bill gets developed. That's especially true in a bill that is budgetary in nature, like a tax bill moving via budget reconciliation. So since you may think of yourself as a numbers person, you're listening to a tax policy podcast after all, today we're going to get into some of the accounting methodologies that could have huge impacts on how Congress comes to grips with the tax cliff. Specifically, we are talking about baselines. And to help me do this, we are joined by our friends Jennifer Gray and Tom Stout. All right, so Tom, with all this talk about baselines, first question is for you. What exactly is a baseline when they use that term? And then I want you to talk a little bit about how do we currently define, or what is the standard definition of what a baseline is?
In the most general terms, if you're going to measure the effect of a change, the question is a change from what? That what is the baseline? What we're talking about generally is the federal budget, which is expenditures and revenues projected out over a 10-year period. And that's a pretty complex calculation because you've got to take into account what the rate of growth of the economy is going to be over that 10-year period, how are wages and salaries going to change, what interest rate is there going to be, how much investment there is, international trade issues. It's a complicated calculation. The economic part of it is done by the Congressional Budget Office. The Joint Committee on Taxation does the projections of tax revenue based on the economic projections of the CBO. It's a pretty complex process. The controversy that's arisen is not a new question. This is something that's been talked about before, and that's in projecting the revenue baseline, whether what we project is based on what the current law is, i.e., without any change, what will the tax revenue be during that 10-year period? Or do we use something else, what we call a current policy baseline?
Before we talk about current policy, then what is the general standard used for the baseline historically?
No question, what's been used historically is current law. It's whatever the law is going to be during that 10-year period. And we've been doing this for purposes of budgeting under the Budget Act of 1974 for 50 years. We've been using a current law baseline.
So we've been talking about the tax cliff here all year. So just tell me again, to be crystal clear, what does current law baseline mean in terms of the tax cliff of 2025?
Well, it means we assume we fall off the cliff, that the changes that are made or the changes that the tax cuts that are expiring, they all expire and the changes come into effect. Just what is provided in the Tax Cuts and Jobs Act, not what the situation is today, but what the situation would be under the TCJA in 2026.
For extending them would cost a lot, trillions, as we've said, right? Because
Right.
we're going from them fully expired, as the law would say, to reinstating them. And therefore, that's why the cost is so significant. Is that right? That current law baseline, that's how we have estimated this $4.6 trillion number, depending on how you measure it, that we've been talking about a year. Is that it?
Exactly.
Got it.
That's it.
Okay, so that's our current standard, current law. We assume the law is, as Congress wrote it, takes effect. Which seems like a reasonable point of view. So then, Jennifer, my question is, then why are we having this discussion around current policy baseline versus current law baseline? What is current policy baseline, and why are we spending so much time talking about it this year?
We know it's really been an issue that Republicans have expressed concern about for quite a while, but they're really, really focusing upon it this year. And so their position is that the current law baseline does not reflect reality and that we should use what is called a current policy baseline, which assumes that the current policies as are in place today would remain in place perpetuity. And that's what would be reflected in the baseline that is used to measure changes against. So in this case with TCJA, the assumption would be the law as it is today under current policy baseline would remain in place as it is today. And you basically ignore the expirations that are written into the law. And so Republicans have been discussing this for a long time. You hear this discussion a lot with respect to the normal extenders that they deal with almost every year, the sense of Congress should not have to raise a tax to stop a tax increase. And so the position of many Republicans is that current policy reflects reality, reflects what is happening today. And to say that if a company were to face $1 million tax increase in 2027, to stop that should not be considered a tax cut. It's just keeping the law as it is. And so the reality from their perspective is that company, if you stop that $1 million tax increase and maybe you change the law so they only see a $300,000 tax increase, they still consider that a tax increase, not a $700,000 tax cut. And so that's one viewpoint, is that the current policy reflects law more. Republicans have also for years been focused on the fact that they think there is a disparity between the way the current law baseline treats spending and treats tax cuts. In many cases, if there is a spending program that expires, the current law baseline that is normally used, in many cases, we'll assume that that spending just continues in perpetuity, even though that's not what the law says. The law actually has a sunset. However, when the same thing happens with tax cuts, when there's a sunset, the law assumes that sunset. And so you have to pay for keeping a tax cut in place, but you do not have to pay for keeping a spending program in place under the traditional current law baseline. And so they think current policy is more fair as well between the two.
Let me ask you the same question I asked Tom then, now that we've heard the rationale behind current policy baseline. What would current policy baseline as applied to the tax cliff of 2025 mean for us then?
It would assume that the law would stay in place as it is today, meaning the provisions of the TCJA would stay in place in perpetuity, which means that the score that we've all been speaking about, over $4 trillion to keep those tax cuts in place, would not be the case. That would basically be scored as zero, because you would ignore the sunset and you would just assume that the current law would continue. So obviously, Congress looking at the same bill and under the current law baseline, that would be scored as a $4 trillion tax cut to keep the law in place now, whereas a current policy baseline would view that as zero, just keeping it in place.
There is a certain logic there, right? We're just keeping things as are. Why should keeping things as are cost money? But back to Tom's point, well, that's because that's what the law says. Tom, let's just say we all agree current policy baseline is the way to go and it costs zero. That doesn't mean the deficit wouldn't increase, right?
Right.
Deficit could still go up.
Correct. And the debt goes up.
Right. That's the challenge that they are going to have to deal with. There's this reality, there's current policy, et cetera, but the deficit doesn't really care how they score it. But this is something that is going to be happening in the background, which has obviously not only real world consequences, but also political consequences. All right. So, Tom, let's just talk then about this current policy baseline a little bit more. What are the hurdles, either political, policy, procedural, in using current policy baseline, since this is kind of a novel idea?
The calculation is no big deal. They've done this calculation before based on current policy. It just means you change one of the variables when you're calculating revenues and expenditures going forward. You just change it to whatever current policy is rather than current law. The question that really comes up is in connection with the budget reconciliation procedures in the Senate, where you don't require 60 votes to pass it. And the rules there are established by the Budget Act of 1974. That's what gets around the filibuster rule. Those rules are statutory, and the fundamental rule that's in question is the one called the Byrd Rule, which says that budget reconciliation bills that are proceeding under budget reconciliation procedures, not subject to 60 votes in the Senate, have to be revenue neutral after the budget period, which is 10 years. So that's where current law and current policy make a big difference. The rule there is statutory. For the last 50 years since the Budget Act of 74 was enacted, we've used current law. And that's sort of the natural reading of the Budget Act of 74. And if you think about it, the purpose of the Budget Act of 74 was actually to give Congress a greater ability to reduce deficits and reduce the debt, which is why the Byrd Rule's there in the first place. Would it make any sense to say adopt a short-term tax cut, then assume that's the baseline going forward? You can basically avoid the Byrd Rule by doing it in a two-step process, using the current policy baseline, make a tax cut permanent, even though it's not revenue neutral after 10 years. That's sort of the difficulty, the hurdle, and the question that will come up is in connection with budget reconciliation.
There's a little technical issue as well, which I think could be overcome, but just to mention it is that another provision of the Byrd Rule, as Tom pointed out, one of the provisions that every single section or part of a reconciliation bill must have a revenue impact. And if the year's current policy baseline extending the current law would not have a revenue impact. So the assumption is that if Republicans were to do this, they would have to tweak every single portion of that tax law of the TCJA in some way. Unclear how much or what magnitude those tweaks would have to be, but there would have to be some sort of tweak to make it have either a tax increase or a tax decrease of some magnitude in order for it to comply with the Byrd Rule. So this may be minor, but it is a little thing, or maybe a big thing, we don't know yet, that would have to be addressed.
Wow, that's complicated. So now we got to go back to almost every provision and find a way to make it a non-zero score by making it cost something, making it lose something.
Right,
Right.
and we don't know how much of a magnitude it would need to be to meet that rule. Would $1 do it, or would it have to be a percentage of, we don't know.
Or does it have to relate to the change that is relevant to the underlying policy, right? It's not a dollar magnitude, it's a modification to the underlying policy. And these are all unknown. So let me ask you another question then, Jennifer, which is maybe an unknown to me, but I bet you know. So Tom talked about a lot of different people. We talked about the CBO, we talked about the parliamentarian, we talked about the role. Who's making this decision as to what baseline applies? Is it CBO? Is it the parliamentarian? Or is it perhaps somebody else?
Every indication is that it would be the chairman of the relevant budget committees, the House Budget Committee and the Senate Budget Committee. The chairman and the budget committees are giving very broad latitude in the Budget Act as to a number of things with regard to what they call scoring with regard to the budget and reconciliation.
So the chairman can just say, as we prepare to mark up this bill, I've determined that this bill costs zero because I applied this baseline, and that's it. That's the end of it.
I would say something a little different. In the first instance, that's clearly what happened, is the budget chairman projects some numbers and then does what he wants to do. Ultimately, though, the Senate parliamentarian is going to decide whether that projection satisfies the requirements of the 74 Act. And that's where the rubber is really going to hit the road, is the question is what the parliamentarian will allow and whether Congress decides to change the parliamentarian's ruling, which they can do. But if they do that at the risk of blowing up the filibuster, which is basically what budget reconciliation is an exception to. If you ignore the rules of budget reconciliation, then arguably you're eliminating the filibuster.
I see. So to your point, Jennifer, you're both kind of saying the same thing, that the chairman can set the baseline. However, whatever baseline applies, at a minimum, the rules of budget reconciliation still apply, including things like the Byrd Rule, but they apply to the baseline as determined by the chair. Is that right, Jennifer?
Yes, that's our understanding, correct.
Okay. It's complicated, folks. But this has obviously big consequences for how this tax bill goes, because so much of the fight is going to be around how big should it be? How should we pay for it? Should we pay for it? Should we add to the deficit? If it all ends up costing zero or virtually zero, boy, that changes the dynamic a lot. So that takes me to my next question. How's this play itself out then? Because we have seen in the Senate in particular, a lot of talk about current policy baseline. How will we know, and how do we think this is going to play out?
Well, under budget reconciliation rules, I mean, what happens is the bill is on the floor and any senator can raise an objection based on the Budget Act of 74 that some provision or the entire bill doesn't comply with the rules of budget reconciliation. Then what happens is the parliamentarian advises who's in the chair, the president of the Senate at the time. Her opinion, Elizabeth McDonough is a name we're going to hear a bit about. She's the Senate parliamentarian. She advises the president as to what the rules are. The president then can either accept her ruling or reject her ruling. If he accepts it, the Senate by majority vote can still reject what the chair has ruled. But again, what it comes down to at the end of the day is if there is a rejection either at the chair level or the member level of what the parliamentarians ruled, then is this a violation of basically the filibuster rules? Have we now eliminated the filibuster? That's the political consideration that's going to come into all this.
Just to be clear, when you say advise the president, you mean the president of the Senate.
Correct.
Jennifer, what do you think? You agree with what Tom just said?
That's a good discussion of the procedural aspects, which is really important. There's a potential for precedent setting here, perhaps, and what that might mean for the future. Yet, from a larger political perspective, as you know, they have to get the votes to pass this. And one of the major issues, particularly in the House, is that there are a number of House Republicans who are concerned about the impact on the deficit. And so, whichever baseline they use, the question is, are those debt deficit hawks going to be comfortable with the impact on the federal debt of this bill or not? And is that going to be an impact on their vote? From a larger political perspective, can they get the votes? And whatever baseline they choose, does it change the view of those deficit hawks on how comfortable they are with the bill or not?
Yeah, this idea, it's not enough that the Senate might agree. We've got to convince House Republicans it's a good idea too. And we all know how incredibly narrow those margins are. So whether it's a procedural, budgetary, or in the end, political question is going to be one of the really important questions to watch this year. Tom, Jennifer, thank you very much. Great episode. In parting, you may recall last week I rose to the defense of budget reconciliation as a way to protect the integrity of the filibuster in the Senate. That despite its many flaws, reconciliation serves as a policy pressure relief valve that, under narrow circumstances and with many guardrails in place, a party can still push through its priorities while leaving the greatest part of the filibuster in place. Maybe you agreed with that, maybe you didn't. There's certainly a lot of space there for reasonable minds to differ. But using current policy baseline, it really does take all that a step further, doesn't it? It's true. Congress has never really paid for tax extenders, you might say. Well, consider this. Before the R&D credit finally became permanent, how many times was it extended? Honestly, I lost track. But how many times was it paid for? Well, I know the answer to that. 0. And maybe it shouldn't matter that the magnitude of the tax cliff is giant. If the principle of extending current law unpaid for is sound at $1 billion, then why should it be any different at $4 trillion? I don't have a great answer for you on that, other than it just feels different. I just know this. If Republicans pass a bill using current policy baseline, Democrats who oppose the bill will claim that Republicans just added $4 trillion to the deficit. And traditional congressional accounting will support that claim. Republicans will then explain to America what current policy baseline is. But you may know this saying here in Washington, and it's this: if you're explaining, you're losing. Just one more challenge on the road to the tax cliff. With that, thanks again for tuning in to Catching Up on Capitol Hill. Take care, and I hope to see you soon.